Hey folks, Dan Frio here, the rate update. Today is June 18th, 2021. Happy Friday. When we come back, I'm going to give you my input on what's going on with mortgage rates. And is now a good time to buy still? So I'm going to answer those questions and more next. Okay, I want to tackle two things on this one. I want to tackle what's going on with rates. And so I have some Fed news coming up in a minute, but is it a good time to refinance your mortgage? And let me let you hear what Jim Cramer has to say about that.
I didn't get up at 3 a.m. to just kind of like listen to the birds. They get up at around 4 anyway. I know mortgage rates have had a little spike, but with bond yields coming down, that's over. Let's see the home builders can weather inflation. I think they are. Rates are down, so affordability is up. That means you should buy. I just got another mortgage today. I locked it in. What the heck? Why not? They're giving them. I'm taking them. Of course.
Okay, to put everything in perspective, rates are still like stupid crazy low. Okay, you can't get 2.99, but it's 3.3. The difference in your rate is $40, $50. I still have people out there with 4.5%, 5%, and they're like, I really want 2.99. Well, if you can't get 2.99 and you get 3.2, it's still better than 5. And that was the point I was trying to make on that survey I did. I did a poll one day and people were asking, I said, what number is higher, 1, 2, 3, or 4? People are like, 4, of course. I said, yeah, that's why I did it. 5 is higher than 3.25, 2.99. So yes, shop around, but don't think you're going to get back to the 2.5, 30-year fixed rates. Those are kind of gone. So watch this real quick. This is what one of the Fed chairmen just said about inflation and about rates. So once you watch this, I'll put some more things in perspective.
Hey, Jim, I just want to try and figure out where you are in relation to the rest of the FOMC. I know that the majority of the dots are now looking for 2 rate hikes in 2023, but there are some people who are looking for rate hikes in 2022. Where do you kind of come down? Where's your dot?
Yeah, I put us starting in late 2022, but you do have to have the idea that these are related to what the forecast is. So my forecast said 3% inflation in 2021, core PCE inflation, and 2.5% core PCE inflation in 2022. So, but if that's what you think is going to happen, then by the time you get to the end of 2022, you'd already have 2 years of 2.5 to 3% inflation. So to me, that would meet our new framework where we said we're going to allow inflation to run above target for some time. And then from there, we could bring inflation down to 2% over the subsequent horizon. Now, I just caution everybody that, other members have other forecasts for inflation, and some of those, if you look at some of those dots, they're below 2% in 2022. So this is very much a debate about what's going to happen in 2022. Is the inflation that we're seeing in 2021 going to persist into 2022 or not? And I think for those that have dots further out, they're most likely associated with a forecast that says that the inflation will go back down below 2% during that year, and then the committee wouldn't have to, wouldn't be oriented toward raising rates at that point. I would say also about this that these are things far in the future in an environment where we've got a lot of volatility, so it's not at all clear that any of this will pan out the way anybody's talking about it. So we're going to have to go meeting by meeting and see what happens.
Okay, so let's review this. Mortgage rates are still low. They're not at historic lows. Why? The economy's starting to recover. The Fed is giving us trigger points saying, guys, rates are going to go up. They're probably going to go up next year, 2022 or 2023. But most of the time when the Fed starts talking about this stuff, it automatically adjusts the markets because they're already talking about it. You saw just the other day when the Fed came out and said, yeah, we're going to start tapering in 2023. Bond market went crazy. The stock market went bonkers. The stock market's down again 400 points today. So they mention it, You don't have to wait for it to happen because everything's going to be baked in by that time. So, as we heard, Jim Cramer just locked in. He's a multi-millionaire, and he's refinancing. Why? They're giving the money away. In perspective, if you can get money lent to you for 30 years, 20 years, and pay 3% interest on that, it's virtually free money. Okay, that's the first thing. The Fed, the next piece of the puzzle was the Fed. What are they saying? Well, guys, eventually all this is going to, the economy is going to kick back in. So mortgage rates are going to go up because of the pandemic will be over, hopefully. Okay, so that's my perspective of all of this. So one of the comments I had, people were putting YouTube kind of comments down below. I love the comments. Some of them I'm just going to ignore because I don't want to get in debates with people because there's a lot of weird stuff out there. But it's like, is this a good time to buy? It's up to you guys. I wouldn't overpay for the home dramatically. You have these people going out there and bidding. The house, I had lunch with a realtor just the other day. You know, houses are going on the market for $250. People are bidding $300 for it. I wouldn't do that. That's giving me my perspective. But, you know, it's like, I always tell people, it's like Bitcoin. Is Bitcoin too expensive to buy for those that, you know, watch or monitor Bitcoin or own Bitcoin? I don't know. You know, where's it going to be in 2, 3, 4 years from now? If you bought it years ago for $10, it's at $30,000 a share now. It went to 60,000. It's back down to 30,000. Where it's going to be next year, I don't know. That's up to you guys. Another comment I get once in a while is, Dan, what would you do? There's a $400,000 house that we kind of like, but the $500,000 houses are much nicer. Don't know if I want that payment. Let me give you my perspective on this. Is I don't ask, or I don't want to be house poor. So what I don't ask when people call me is they're like, you know, how much can I get qualified for? I stop them right there. How much are you comfortable paying? Realistically, because I'll have people come back saying, you know, I'd love a house payment of $1,000. I would too. I'd like a Ferrari and have no payments or a $100 payment, but I can't. So I always go back, realistically, what can you afford? And let's back in the number on your affordability at that price. Can you up it a little bit? Yeah, maybe. I wouldn't bite off way more than I can chew, because you're going to get in the house. You're going to have more expenses than you know. You're going to have that extra heating bill. It's bigger. More cable, because you might have had cable at your apartment, but it was in the payments. You're going to have homeowners insurance. You're going to have repairs. You're going to have a lot of unforeseen events. That's why I'm also not a proponent of putting every penny you have down on the property, because you need to have a safety net. Okay, so that's that. So let's get talking about today what's going on in the news and what's going on with rates. Rates are starting to come back, but this is one of the comments one of the videos I just showed you. Jim Bullard is one of the Fed Reserve chairman, and he came out and he said exactly what he said. You know, all this is way in the future. We don't know what's going to happen next month, so it's hard to really predict where we're going to be 2022, 2023, and so forth. But the one thing that we have going our way is MBS markets are starting to recover, like I said on just the other day. So let's see the chart there so I can guide you guys through that. So, okay, you can see here, remember just the other day I said, and if you didn't watch my video, please go back to Wednesday's report. And this is what happened, you know, to the market. So let me put this page in perspective. What this page represents is what's going on with the price of a mortgage-backed security. It's a bond that trades on Wall Street. Okay, let me explain this in detail. So this bond trades on Wall Street. It is the biggest component, the biggest piece of the puzzle when it comes to mortgage rates. So it's what's the yield on that thing? Okay, so we take that yield and then we add back in what we call in the mortgage industry loan level price adjustments. Their initialized is LLPAs. So it's like if your credit score is low, it's an adjustment to the rate. That's a loan level price adjustment. So if you have a 740 credit score, you're getting the best rate in town. If you have a 630 credit score, your rate's going to be higher. It's riskier for us, so we increase your rate for that risk tolerance. Same thing as if you're buying a single family home versus a 4-unit building. The rate is better on a single family than a 4-unit. That is what we call a loan level price adjustment. So you have your yields on your MBSs, you have the loan level price adjustments, then you have the profit margins of the banks or the lender you're going through. Those are the biggest components. When all that adds up, that's the mortgage rate you're going to get. Okay, so what this is describing to you is we're charting the price of this mortgage-backed security. So what happens when the price goes, we'll go in this case, it's up. So that price is up. What that means is the yield on that bond, the mortgage-backed security, is dropping or going down. So we like when the bond price goes up because rates go down, okay? So that's how that part works. So let's go on to what we were going over on the chart. So you saw back when we had a nice little rally in the market back from March 29th all the way through May like 9th or so, okay? Then right here, you can see this hiccup in this range here, similar to this hiccup here. Guess what happened this time of last month? The Federal Reserve came out and everybody was worried about inflation, okay? So then we had this drop, okay? When it drops, rates go up. Then what happened? Everybody kind of started coming out and saying, oh, it's not going to be so bad. It's going to be okay and so forth. And it normalized. It never got back to this level where we were right here, but we recovered some because the markets always overreact. Then we stabilized. And then all of a sudden the Fed came out this week and this is what happened here. But going into that meeting, the inflation word came back out, and then the Fed came out on Wednesday and said, we might taper, in a couple years from now. Boom, the market crashed, okay? From there, I said, go back and watch my video. I said, we'll probably recover right about to here, and then we'll hit normalcy, okay? And like we did here, we recovered about, I thought we were gonna stay in here, and we went a little bit higher in these numbers than I thought, but then we recovered and came back right here. Look, we didn't recover back to this level. We're not going to probably recover back to this level, okay? Why? Unless the pandemic hits majorly again, which I think we basically have herd immunity right now, we should be okay. So what does that mean? Well, it means we're going to get back to normal eventually, okay? So that's what's going on there. And that's why I see we should be stabilizing right in this area here. Now let's take a little bit of a micro snapshot of this. This is what's going on today, okay? You saw it opened, the market opened, we kind of went, oh shoot, sorry about that. We opened and then we deteriorated. This is a major, I don't know if this is a snafu in the system, but that's kind of a weird candlestick there. And then we recovered throughout the day. We're still recovering. Look at this. I love all these green candlesticks. What this means is there's more buyers in the market than sellers. So as this price keeps going up, rates are going to continue to come down. I've spoken with many people on the phone in the last couple of days, and I'm like, guys, I'm not locking you in because we're in a nice little rally phase here. So why would we lock in here to continue to see the price go up or rates come down? So that's what we do for you here, okay? Let me get into the rates that you guys follow. I don't know how accurate this rate is because it's saying data as of June 17th. And the rates moved a little bit more than this, but I'll post this. So we're monitoring this long term, not really, we do it day by day. But this is basically a composition of what Black Knight comes out with. They survey lenders all over the country. We respond back and they put this report together and it goes over 30-year rates. The 30-year conforming, jumbo, FHA, and VA. Okay, here's where the rates are. Okay, what these three columns here show is a one-day delta. Delta means change. So you have a one-day change, 7-day change, and 4-week change. You can see nothing's really happened here, which is that's kind of common, but over here, the 7-day delta should be more of an exaggerated number, and I don't know if Black Knight's trying to play catch up or not. So Monday, Tuesday, Monday we should have a more accurate report because they'll have all weekend to compile this data. And then you see a 4-week delta, and it's saying we're up, but up just a little bit. So let me explain what 5 basis points represents. 5 basis points is actually, I'll just say this number in total. This 5 basis points means in numerical numbers 0.05. So it's 5/100ths, okay? So then you have 2, so that would be 0.02. 12 basis points would be 0.12. Okay, so that's how you read this. The trend has been stable, but they're missing something here, guys, so I don't want to misrepresent anything here. So on Monday, we're going to dive into this a little more in depth, and I'll showing you some live numbers. But that's what we got for today and for the weekend. So what I've been asking people to do, and you guys have been responding, please don't forget to give me a thumbs up. That helps the algorithms huge. Subscribe down below, hit the bell. If you don't hit the bell, you don't find out the videos that I post daily. You don't have to watch all of them, but I hope you find something that does tickle your fancy when I do post it, and you take a watch to that. What I've been asking people to do is, if you have a mortgage quote right now, please send it to me. Let me see if I can do better for you. What I do is I write all over every one of them with a red pen and tell you what I can do versus what you have. So let's say it comes back and you have a fantastic offer. I'm going to come back and basically go to you. I'm not going to hard sell you on anything or try to say, hey, mine's better. I'm going to say, God bless you. Take it. Sign, seal, move on. Okay? But many times I can use this red pen and save you a bunch of money. Let's say we can get you the same rate but save you $2,000, $3,000 in costs. Okay, it's a win. All I ask you to do is email me your loan estimate. If you haven't done anything yet, send me your mortgage note or your mortgage statement, and just give me some backdrops. Let me know what your credit score is, maybe your home value. I can look up all that information on your mortgage statement because it gives me your address. What I won't know is basically what your credit score is. So if you can let me know what your credit score is briefly, I can come back to you and say, hey, here's a mortgage analysis. Does this make sense to you? It does to me. Or I might come back and say, you know what, you're fine. Keep doing what you're doing, or send in an extra payment a year, and that'll drive down your payoff, so you pay off your house quicker. So I'll do all that for you. We have a lot of programs. If it's a mortgage out there on a residential property, I have it. So we could be your one-stop shop. If you're looking to get pre-approved, we should be available for you almost 24/7. We have a mobile app. I'm going to show you how to do that briefly. And then even over the weekends, I have a whole staff of people working, and they're basically on call. So if you request something, we usually get back to you pretty darn quick. And we have a brand new website coming out next week that you'll be excited about. So how do you find out more about me and my team? Well, what I ask you to do is just go to, check us out on YouTube, The Rate Update with Dan Frio. You're going to have over 900 videos, and we're closing in. We have not hit it, and I need you guys' help to hit 14,000 subscribers. That'll help huge. But the next thing is, here's where you go to. This is going to show you how to get in touch with us or apply online. Click right here to apply online. Okay, that's the simplest form. You click that, it'll take you to this page. If you're looking to buy or refinance, you click those. If you want to call us, 844-775-LOAN. There's our phone number right there. What most people are doing right now is they're scrolling up just a little bit, and they're putting in a meeting that you'll have a consultation with me personally. You can pick a 15, 30, and if you have to, we'll do a 60-minute consultation. But you just click it. You pick the times that are available, days and times available. You just click that, and then I'll be reaching out to you saying, okay, how do you want to do this? You want to do it via phone call or maybe a Zoom meeting so I can see your mortgage statements and so forth. So that is it for today. I hope you enjoyed the video. Please give me a thumbs up. Have a great weekend. Be safe. And I'll see you next week. Take care. Bye-bye.